Hello, this is Cynthia Fick, and this is the March 11th stock market update. Well, as we'd been saying the last couple of months on this stock market update, that we felt like the market was going to be very volatile with all the changes going on because of the new administration. The market wasn't sure how to respond to any of them. And then over this weekend, President Trump came out saying that he's not really looking at the stock market and that, yes, who knows, we may have a recession. Well, the stock market, definitely was looking at him, listening to him, and obviously has responded that not real happy about that. So for those of you who had gotten overweight over the last few years in stocks, just because stocks have done so well, we skimmed some off and brought you down to your original tolerance. And so the next thought is, what do we do going forward? So we're trying to take measured, prudent steps that make sense for what's going on in the market. We want to knee jerk and sell everything we have because that's really risky too. Because the market we could wake up tomorrow morning and hear that, oh no, you completely misunderstood me. I do care about the stock market and it's very important to me. So we just don't know what might happen. And we certainly do not have a crystal ball. All we can do is watch the market, watch the stocks, and let them kind of tell us what they want to do. And so this is what I'm going to point out to you today, looking at a bunch of charts, just showing you the kind of things that we're waiting and watching for to see if we should take further action and become more defensive. So let's start off with a chart of the S&P 500. And this is a daily chart of the S&P 500. And it goes back to the end of 2023, as you can see. And so this is most of 2024. And you can tell in April 2024, we had a pullback. In July, August of 24, we had a pullback. This was about 10%. And you kind of fast forward to today, and you can see we have what is, as I speak, about a 9.2% pullback in the S&P 500. The thing that's different about this, as you can see, is that we've pierced the 200-day moving average. It's important moving average and something that we watch. The other two pullbacks we had in 2024, you really didn't come anywhere close to that. And so this is just something that's very different and maybe a little more concerning, mostly because the market had kind of traded sideways for the last few months. So we pierced the 200-day moving average. Another thing that's happening that's different is this is a red line. It's 50-day moving average. And it has actually started turning down. And that is a little bit concerning too, because in the previous pullbacks, it really didn't start coming, pulling down. And we have in this. So let's look at a weekly chart of the S&P 500. And this goes back to 2020. And, we can see what happened. And this black line is the 40-week moving average. And you can see in early 2022, we busted through it and tried to rally, couldn't do so. And then we had our, 37% pullback in the market. Kind of fast forward to today. Well, we've pierced that 400-week moving average also. And just something to note. Do I think this is anywhere near what happened in 22? So far, not at all. But, just something that we're waiting and watching for. Let's go to the monthly chart of the S&P 500. And this goes all the way back to 2005. And there are some of you that were with us at that time. So this black line is a 24-month moving average. And you can see way back when, if you can remember, we started having trouble in the beginning of 2008 and broke through that 24-month moving average, tried to rally, couldn't, and then dropped, 50%. Various periods of time where we've come back and slightly, tapped into. This is the 2020 kind of quick little pullback we had there. And, we tapped in and then had a pullback. So we're nowhere near that yet. And to come back down to that line, it looks like we'd be around 5,000 in the S&P 500. And right now we're at 5,630. So that's another, 600 points or so, which would put us at about 20% down on the S&P 500. These are just things we're watching, and just, trying to point out that, this could become a bit bigger deal. Does that mean we rush in and sell everything? No, that's not prudent. That doesn't make sense, because if for some reason we wake up tomorrow and things are different, then the market could go kind of racing away from us. So we're just slowly watching the market, letting us show us what it wants to do. And as in 2008, 2009, the market slowly kind of talked us out of it. As the market didn't hold up and started breaking through different levels, we got more defensive. And so we are in a position where at some point we may do that. Not there yet, but these are the kinds of things we're watching. And you will, no doubt see when we start to make some changes. And so that's all for this week. And hope you have a good one. And we'll talk to you next Tuesday. Bye-bye.